This conference will now be recorded.
Good morning. This is Scotty Sykes with Sykes Company. We specialize in pharmacy accounting, tax, and advisory all over the country. Today, I'm honored to be presenting to you the COVID relief bill that Congress recently passed. Um, there's a lot going on in here, so hopefully, we're going to help you dissect this. I know the NCPA had a lot to help push this through as well. I know they've done a lot of work on their end, so we're thankful to be here representing the NCPA to help you grasp everything that's in this bill. So we're going to try and do a high-level overview for you here. Obviously, a lot of moving parts here. Please speak with your own professionals, your own advisors before you do anything with this particular bill or anything for that matter. This is for educational purposes only. Quick high-level overview. We're obviously going to be going over the PPP forgiveness updates, PPP 2.0 as I call it, some SBA modifications and changes, some tax credits, stimulus checks, and HHS Provider Relief updates as well. Again, this is all in the bill. Bill was passed in Congress. President Trump has yet to sign this bill as of this morning, December 23rd. So not sure where all this goes from here, but this is what we're going over is what has passed Congress. Again, has not been signed by Trump yet. Okay, the PPP. We're looking at tax-free forgiveness for loan proceeds and deductible expenses paid with those PPP funds. Huge change. Obviously, when the PPP came out in the CARES Act, it was Congress's intention that these proceeds and the expenses would be tax-free essentially all the way around. IRS said no, you didn't make that clear. So this bill, again passed by Congress a couple of days ago, has it in here where this is tax-free and reverses the course of the IRS. Great news for all borrowers out there, really, as we'll see in a few slides. I get to an example showing this, but great news. And furthermore, the IRS had where this would have been taxable in 2020, essentially, if you reasonably expected to have forgiveness, which most people would. So, huge update here. Now, this applies to all borrowers. If you've already applied for forgiveness, um, you're still going to be in the tax-free area here for the portion that's forgivable. The expanded cover period options has also been modified, so you can take 8 weeks or 24 weeks, but this bill says you can take anywhere from 8 weeks to 24 weeks to use the PPP proceeds and when applying for forgiveness. So it kind of makes a little more flexibility when we're talking about the forgiveness application process and the complexity involved with that, which is extremely complex. It does reopen the original PPP program. So if you're a pharmacy out there that has not gotten a PPP loan, which I believe the NCPA survey had about 98-99% of pharmacies did, but if you're one of those that did not, there's $35 billion in that program, the first PPP, for those who have not borrowed. Again, you can only get one PPP loan here. They have expanded the covered costs. So if you have already applied for forgiveness, this is not you. But if you have not applied for forgiveness, they have expanded the covered costs. And we'll get into the next slide, which will be operational expenditures, supplier costs, worker protection costs, and property damage costs. Not going to get into a whole lot of detail here because most pharmacies won't have any issues using these funds within the original intent, which is payroll, rent, utilities. But if you do have some planning, you can clearly take advantage of some additional costs here. PPP forgiveness has been updated and changed as well. A welcome relief if you're a pharmacy under $150,000 with a PPP loan. You can essentially have a one-page application to sign off for forgiveness, pretty much a rubber stamp there. You do have to certify, you meet the requirements or whatever they're going to have in there, but it's it's yet to be seen what's going to happen here, but I don't think these limitations and everything are going to apply. It's really going to be a rubber stamp, and you have to certify, that you're not fraudulent and all that. So the SBA has, I believe it's 25 days to release a new application for this. Um, so, patience is the key here, and patience is really with the PPP and the CARES Act. Patience has always been the theme. The ones who have been patient here really are seeing the benefits of that patience. And I would continue to apply that theme here with all, with such massive regulations and new programs. There's so many questions, so many weeds to filter through, that when you're patient, you're gonna get it's going to be easier down the road for you. So keep that in mind. EIDL advances and grants do not decrease forgiveness. So this, prior to this bill, they did. This says it does not. So if you've already applied for forgiveness, the EIDL came off of that amount, and you have to pay back the portion of the PPP that was essentially the EIDL grant, which was up to $10,000. I'm not sure what's going to happen to you guys, how that's going to work, but if you have not applied, you don't have to worry about the EIDL advance decreasing forgiveness. More information, I'm sure, will be released on that for those who have already applied and had their PPP forgiveness reduced because of the EIDL grant. Loans over $150,000, you're still going to have to go through all the requirements, all the complex calculations, all the documentation. And of course, with all of this PPP, you want to keep documentation on hand in your permanent file for at least 3 years, but I would be keeping it in there longer than that. So, but a welcome relief here for PPP for loans under $150,000, which should be a lot of you guys out there, a lot of pharmacies out there. And just be patient as the SBA rolls that out. Assuming, of course, this is signed into law. Now, PPP 2.0 is also passed in this bill. So this is a second draw loan, is kind of what they're calling it. But this is in the bill. I'm calling it PPP 2.0. But it's a max loan amount of $2 million. They have narrowed the eligibility. Fewer than 300 employees received and used the full amount of the first PPP loan. So you had to have gotten the first PP and used it. And you have to have been in operation prior to 2/15/2020. There are expanded amounts available for certain industries. Pharmacies not included there. It's more along the lines of restaurant and hospitality, transportation. And then the loan amount calculation is slightly different in this case. Now, there was a bullet point on that previous slide talking about you had to have had a 25% drop in gross receipts in the first, second, or third quarter in 2020 as compared to the same quarter in 2019. This is a requirement in the bill, but I imagine there's going to be some updates, changes, modifications, leeway when this is all interpreted and finalized by the SBA. First and foremost, they've simplified the gross receipts test certification for loans less than $150,000. What does that mean? Not sure. Will it just be a one-page certification where you say, yes, I've got a 25% reduction, and you check a box and you get the loan, or what? We don't know. But I imagine many pharmacies out there have been relatively stable throughout all this COVID crisis. And so I'm not going to expect a lot of pharmacies to be eligible for PPP 2.0. With that said, there could be a lot of modifications here. There could be some changes. We'll just have to see how this unfolds. But keep this one on your radar. Keep your eye open for this and for new developments here. EIDL, Economic Injury Disaster Loans. These were grants or advances, well, they're loans first and foremost, but if you applied for the loan, you could also ask for the grant or advance, and that was up to $10,000 or $1,000 per employee. This grant is non-taxable, and expenses you've paid with the proceeds are deductible. So again, another tax-free benefit here for a lot of pharmacies. They've expanded the advance and grants here in this program. They've added $20 billion to that. It does not reduce PPP forgiveness total, as I've mentioned, going back to that quick point where if you've been patient through all of this, you're seeing these benefits. Being patient has paid off here. And the PPP not being reduced by EIDL is one of them. Now, there's going to be some additional EIDL advanced targeting certain employers, low-income communities, etc. They're saying in the bill it's got to show an economic loss of greater than 30%. Not real sure how that's going to be defined, how this will all play out. Perhaps there will be some pharmacies out there that would be targeted there. Not sure. Again, more guidance to come there, but I would put that on your radar as well. They have extended the deadline for the economic injury disaster loans to the end of this next year, 2021. If you do go after the economic injury disaster loan, be cognizant of the terms and conditions, particularly the requirement that you have to ask the SBA for permission to draw money out of, say, if you're an S corporation, to draw money out of the S corporation. That's not your payroll. So you got to understand those terms and conditions. A lot of pharmacies was not a good fit for some because of those terms and conditions. So just understand what you're getting into there. Moving right along here, SBA Debt Relief. This was a great added benefit for a lot of pharmacies out there that had 7A SBA loans on the books prior to the pandemic. And essentially, the SBA paid your principal and interest on that debt for 6 months. Huge update here. SBA debt relief payments made on behalf of the taxpayer are non-taxable. Non-taxable payments being made by the SBA, which is fantastic. There's a lot of money on those 7A loans each month, and now that's non-taxable to you. They've paid it for you, and you're not paying tax on it. So big plus there. A curveball I didn't expect coming in the bill was the SBA is going to expand the debt relief program beginning February 2021, and they're going to pay 3 months of principal and interest for these 7A loans that were already on the books prior to the pandemic. As I understand, that's the rule there. And I believe they're going to go 6 months for other industries, restaurants, hospitality, those kinds of things. But 3 months for everybody else is what I'm hearing. I'm also hearing that, there's likely going to be some form of limitation with this. Will it be the full amount of the loan, or just a portion of it up to $10,000, or what? Don't know yet. We'll have to see how that plays out, what the SBA does. But you would think they would define that payment a little more than they have in the CARES Act. But we'll just have to see how that plays out. So more guidance here. But if you have a 7A loan on the books, definitely mark this one as something you're going to monitor. HHS Provider Relief, $3 billion was added to this fund. HHS continues to have full flexibility, discretion over how they implement the program, how they do the fund. 85% of the grants through the application process will now focus on financial loss, among others, but it's going to focus on financial losses. So we'll have to see what they do there. Revenue reporting rules have been updated by Congress. So when you do apply for those grants, you have to enter all this revenue information. They're updating that. Congress is going to make them update that process, but I have not yet seen how any of this is going to impact pharmacy yet. As it stands of this morning, you have to have patient care revenue, and they are very clear on the HHS website that prescriptions do not count as patient care revenue. So certainly there could be some changes and updates where pharmacies can get benefits out of this program. I know pharmacies have already gotten funding here with the HHS. I would just advise you to be aware that they have clearly said prescription revenue doesn't count. If you've applied off of that, you just need to be aware that there might be some changes that require you to pay that back or what, not sure, but this has been a rough area for pharmacy because it's really not been clear on how this program really is to benefit pharmacy. But this continues to evolve and update, so we'll just have to see what continues to transpire here with the provider relief. But we'll certainly be keeping our eye on it in the months ahead. Now, you do have reporting requirements coming up where you do have to, it's essentially a mini tax return type situation. If you did receive HHS funding greater than $10,000, so you've got some due dates coming up if that is you on reporting your use of the funds, etc. The stimulus payments also a big part of the package as well. But essentially $600 for single filers, $1,200 joint, another $600 per qualifying dependent under age 17. Phase outs when AGI exceeds $75,000 single, $150,000 married. I forgot a dollar sign there. You have to excuse me for that. But so these do phase out, and wouldn't expect anything very significant here for our pharmacy owners out there watching this. Meals. This is a big area that really caught some people off guard. They wasn't expected this would make it in the bill, but it surely did. And so this is where originally qualified meals were 50% deductible. This allows 100% deduction for business meals and beverages provided by a restaurant. So we'll have to see how they define restaurant and what exactly that means, because some people will have some questions there. But for 2021 and 2022, 100% deduction for business meals and beverages, up from 50% deduction. Now, of course, you need to make sure you meet all the requirements to deduct a business meal, who was present, business purpose, how much, when and where. A receipt, credit card charges don't count. It just shows the amount and that it was paid. It doesn't give you all the other detail. IRS wants detail. They want documentation. I had a client recently didn't have that information. And the IRS denied his meals deduction. So definitely keep these logs, keep a business log for meals, for travel, so that way when the IRS, if the IRS does come knocking, you've got an insurance policy there that you've documented everything. That's going to be very important, especially if you're looking at 100% deduction for these meals and beverages for 2021 and 22. Again, I want to reiterate, this is the bill passed by Congress by overwhelming majority. However, as of this morning, December 23rd, President Trump has not signed this. Employee retention credit, tax credit, lot changes here. So this is going to evolve significantly. Stay tuned for updates here. But essentially, with the CARES Act, you couldn't apply for this credit if you got the PPP. They've changed that. If you have the PPP, you can now get the employee retention tax credit as well. You just can't double dip. You can't use PPP funds that you're paying employees and then take a credit off of those funds that you paid for the wages. So you can't double dip there. This is definitely going to evolve. Now, it does say that you have to have a decline of 20% in gross receipts year over year. Have to see how that plays out, how they define that more particularly, but may kick out most pharmacies due to that requirement. But do know this will probably be something we'll want to keep our eye on as this is updated, modified going forward. So this continues and is modified. And the credit amount is actually pretty significant here. So this is something we need to pay attention to as this unfolds. Now, several other items in the bill, in particular, I want to comment on is the medical expense deduction has been permanently moved from 10% of adjusted gross income to 7.5%. So if you're a Schedule A itemized deduction filer on your personal tax return, your medical expense limits dropped from 10% to 7.5% of AGI. So you have to exceed that AGI threshold to be able to deduct those expenses on Schedule A if you itemize. That's now permanent. New market tax credit, 5-year extension, essentially tax credits for investing in economically distressed areas. Work opportunity tax credit, essentially a tax credit there for or hiring targeted individuals, such as ex-military or something like that. I think there's about 10 of them, a list of 10 of those where you can hire and get a tax credit for. Payroll providers should certainly be available to provide more information on that. Exclusion of income on discharge of qualified indebtedness from a personal residence. That's got a 5-year extension. A bunch of energy investment credits and energy changes, not necessarily would really apply to pharmacy, but there's a few of them in there that could apply. So we have extensions there. If you do not itemize your deductions, you get a charitable contribution of up to $600 for joint filers. It was originally $300, so they pushed that to $600 now. That's a 1-year extension. And then charitable contribution limits expanded to 100% of AGI. So if you have an AGI of $100,000, you could donate $100,000 and essentially reduce your AGI or taxable income down to 0. Now, this is optional. If you do fall into that bucket, you may want to consider not taking this option and pushing off your charitable contributions, maybe the other half to next year. So you're reducing or you're using your charity against monies in a higher tax bracket, if you will, because a little planning idea there if that falls, if that meets your needs. Payroll tax deferral was expanded. So the due date, if you did follow through with the payroll tax deferral, you have until the end of next year to pay that back rather than April 30th. If an employee leaves you, you owe the taxes that they owed from their withholding from their paycheck. So you're going to owe what the employee should have paid. So this is, I'm not a big fan of anything deferring payroll taxes. I'm a big fan of, you want to pay payroll taxes because penalties and interest, and the IRS just has no leniency here with payroll taxes. Pay your taxes, payroll taxes. The Families First Coronavirus Response Act. So this expands that refundable credit into the first quarter of next year. Some other technical changes as well, but that credit provision continues first quarter. I also want to touch on, this goes back to the CARES Act, but for 2020, if you have a net operating loss, you can carry that back, apply that loss to prior years where you've paid taxes and get an immediate refund claim right then and there. So, and that applies for 18 and 19 as well. We've had some pharmacies that had those losses where we were able to maximize depreciation or something like that, get those losses, carry back the losses against income they paid in the past or income tax they've paid in the past and get refunds this year. So got some good planning tips there for these net operating losses if this is you. The bill expands unemployment insurance, expands student loan exclusion for employees paid by employers. We've had some pharmacies move forward with this where they will pay these students student loans up to $5,250. It's a deduction to the employer, non-income, non-taxable to the employee. So that's a kind of a good little bonus for your student employees rather than maybe a cash bonus where you might pick up some payroll taxes in there. So something to think about there, but that's been expanded. There's been disaster tax relief provisions added and expanded. The one I want to touch on in particular is the tax or penalty-free distribution of retirement funds for disaster-related circumstances. So if you ever find yourself in a disaster-related situation and in need of funds, there is that penalty-free distribution. Of course, anytime you're taking money out of a retirement plan, you want to make sure that's the right thing to do, just generally speaking. FSAs for the pharmacies out there with FSA program, flex spending accounts. There's been a lot more flexibility added to that where you can modify how you use it, or unused proceeds can be modified and rolled forward to 2021 and 2022. I also want to mention, we're going to get into the case study here. So this is before the bill passed. This is what things would look like before the bill passed. So you have a pharmacy, RX pharmacy here, $100,000 taxable income, $150,000 PPP loan, $5,000 EIDL advance, and $35,000 of SBA debt relief, $290,000 of total taxable income. All that would be taxable prior to Congress passing this COVID relief. 32% estimated tax rate, $92,800 tax liability here. Now, if we go to after the bill, what it looks like now, again, President Trump has not signed this yet, but with the bill in place, $100,000 taxable income, same income, but you can see total taxable income here of $100,000 because PPP is non-taxable, 5,000 EIDL is non-taxable, SBA is non-taxable debt relief. So you got a $32,000 tax bill here estimated. Tax rate was 32% in the example, but total tax savings between before and after $60,800. So these are the kind of numbers we're talking here for pharmacy, which is some game changer stuff here. So major updates here as far as taxation is concerned. Now, as we get into, I do want to mention one thing about the PPP loan, EIDL advance, SBA debt relief. That's non-taxable income, and particularly the PPP loan would be non-taxable income, which would increase your basis in a pharmacy, but it wouldn't increase your basis in a pharmacy until next year, until you got that forgiveness. Most people have waited until this point to get these updates before they apply. And basis is very important because it determines how you, if you can take losses against other income, whether you can take distributions out of an S corp that are non-taxable. But do know that there's some basis changes in here with the result of this bill that impact you as an S corporation or a partnership or just in general. So keep that in mind. Talk to your advisors about that. Talk to your advisors about how you can maximize basis to offset other income, or what you can do there before the end of the year, because there's a lot of good planning you can do there with just simple basis planning. All right, what's missing? So, President Trump hasn't signed the bill yet, so that's missing. What's going to come? What's next? How's this all going to unfold? What are states going to do? Are states going to adopt these changes? Are they going to tax the PPP and all these other programs? Are they going to, follow along with federal and do non-taxable? So big curveball here for all states out there. Obviously, they're all different. So we'll have to see that how that unfolds. But be paying attention to that. You don't want to just focus on federal and then get caught off guard there at the state. So be paying attention to that. And how, assuming this gets signed into law, how is all of this going to roll out? The theme for the CARES Act and the PPP was just be patient. Let this thing go. I know a lot of banks out there were pushing to get your applications in, get your applications in. Those who didn't do that are now faced with a one-page paper to check off for the PPP forgiveness application if you're under the 150 threshold, and that's hours and hours of time you're saving from the complex calculations. So be patient with all of this. Let this thing roll out. PPP 2.0, there's going to be guidance. There's going to be frequently asked questions. Let these things unfold and just be patient as we navigate these waters. But a lot going on here. This bill's massive, and so we'll just have to see what happens. So it's going to be an interesting 2021 for sure. Now, if you have any questions, I'll do my very best. We'll do our best to help you out any way we can. Ask Sykes at sykes-cpa.com. Any feedback, any comments, would love to hear it. We're here to help you guys out. I want to thank the NCPA for all the work that they do. They've pushed hard for a lot of these changes. They got a great team, so we're certainly thankful for everything they do and for all the hard work they do. But I just want to thank you all. Hope everyone has a Merry Christmas, a happy holiday. Thank you.